In terms of coming out of the pandemic, how should we view that? Will that ease sort of this hot housing market? Because that's certainly what heated it up in the first place.
Yeah, I think one of the concerns that we have in 2021 is that housing affordability conditions will erode. We obviously have very strong demand, very limited inventory, a shift in the geography of where people are buying homes in 2020. Home prices went up, so those demand side factors that you mentioned, combined with these limitations on the supply side, like growth in lumber costs, it's taking longer for building materials to arrive. All those factors will make 2021 an up year, but one in which the growth rates will be a little bit slower than what we saw in 2020.
How are you thinking about how that demand eases post-pandemic, Robert? And I guess embedded in that question is how permanent have these changes been when it comes to demand for different geographical locations and demand for houses as opposed to apartments?
Yeah, I think we got to be clear that demand is really strong. So what we're talking about is an easing of some of the demand that we saw in 2020, which was really supercharged by the virus itself. I think in terms of thinking about permanent effects and temporary effects, the geography of housing demand is really part of that story. We saw a significant suburban shift in where construction took place in 2020. I think some of that persists in 2021 and 2022, but some of the demand that we saw come out of the urban cores will roll back after the vaccine is deployed and as the labor market recovers.
Do you think that that those urban cores, that's really fascinating to me, because there was a lot of building that went on in New York City, and I would think that there's a lot of downward price pressure as people have moved out. How soon do you, or in Washington, which is my hometown, or in Boston, where it was desirable to live in the urban centers, now not so much. How soon does that come back?
I think it comes back with the vaccine. So if we're making conservative assumptions about mass deployment of vaccination, that'll be the fall. But in the meantime, we have seen rising vacancy rates, declines in rents and the urban core. And I think we have to be clear that some of those changes in demand were life cycle based. So the leading edge of the millennials is turning age 40. They were going to move from those apartments in those urban cores that you mentioned out to the suburbs at some point. I think what the virus did was increase the demand that people were looking for space, the Zoom rooms, home offices, and the like.
When does the balance of power tip, Robert, when it comes to a seller's market versus a buyer's market? Does it happen this year, do you think?
I don't think it happens this year, but we have to watch mortgage interest rates. I think we saw at the end of 2018 when rates got near 5%, the housing market did stall at that point. So keeping in mind, we saw 10% year-over-year gains in home prices, home construction costs, including lumber, up about 190% since mid-April. Those factors are going to add to cost combined with those rising interest rates, and we'll see a slight cooling, but still growing this year.
Robert, good to speak with you. Thank you. Robert Dietz.
Shepard Smith here. Thanks for watching CNBC on YouTube.